In this video, I'm gonna show you why investing in a rental property is probably one of the worst investments you could probably make right now.
What?
And I'm not just gonna give you my opinion, I'm also gonna show you the data to back it up. For that, I'm going to compare rental properties to the S&P 500, QQQ, and Bitcoin. If you have $100,000 that you want to invest for the next 10 years, and you were to put that in the S&P 500, based on past performance, the S&P 500 could give you an average return of about 10% per year. And the expense ratio is only 0.03% if you go with VOO, for example. That would be about $3 per year for every $10,000 invested. After 10 years, your $10,000 will turn into $259,000 roughly. Now, if you put that $100,000 in QQQ, based on past performance, you could get an average return of about 14% per year. And the expense ratio for QQQ is slightly more expensive, and that's about $2 for every $1,000 invested. And after 10 years, that $100,000 would be about $370,000. Now, if you were to put that $100,000 into Bitcoin, based on past performance, Bitcoin could give you an average return of about 50% per year for the next 10 years. And there are no fees for Bitcoin, which is great. You only have to pay about somewhere between $50 to $300 for a Bitcoin wallet just to keep your Bitcoin safe, unless you want to just keep it on Coinbase, for example. But hey man, that's up to you. And after 10 years, your Bitcoin would be worth about $5.7 million. Now, for rental properties, based on past performance, you can get an average return of about 11%. The average return of rental properties in the United States has been about 10.6% per year. And in Maine, it's about 5 to 8% per year. Now, in terms of fees, you have the inspection fee, the appraisal fee, you got your loan fees, the escrow fee, the title fee, and on top of that, you're gonna have to pay property taxes forever. Plus, you're gonna have to pay insurance probably forever. And if you ever wanted to scale out and get more properties and buy more buildings, you're gonna have to hire a property manager, hire an accountant, or maybe multiple accountants, to get a tax manager. And also, on top of all of this, you also have to deal with tenants. If you are unlucky and you cannot find great tenants, sometimes you may have to kick them out, and that will require you to hire a lawyer and also have to deal with legal fees. And on top of this, you also have maintenance. Plumbing, your roof, you gotta change almost every single decade, hot water, electricity, and so on. So I know that past performance does not guarantee future results, but based on all this information, if you had $100,000 right now, where would you put your money? Especially since the inflation rate has been about somewhere around like 7 to 12% per year. And I know that you've been hearing that, oh yeah, inflation is only 2 to 3% per year. That is not true. Like that's all a lie.
We did a report recently, one of our big research pieces that our CIO, Glenn Cameron, put out called The Inflation Illusion, where it basically dispels the idea that CPI is the real inflation metric. And we proved through the data of that M2 money supply growth that over the last 10 years, the last decade, M2 money supply has grown at 12.8%. So to Mason's point, if your business and your treasury reserves or your revenues, if you're not at least keeping pace with 12.8%, you're losing purchasing power over time. And we obviously know that Bitcoin is one of the few assets that has consistently outperformed M2 money supply growth because it's the best performing asset of all time.
Now, a lot of you guys might be thinking, what if the stock market crash? Well, what if the housing market crash like it did in 2008? Everything has a risk. The only thing that is riskier than not investing is actually keeping your money in the bank, losing 7 to 12% per year. Also, I was trying to run some numbers to see if I could find a house for like $400,000 and I put down $100,000 as down payment for a 30-year loan at an interest rate of about 6.8%, which is, they're about 6.8% right now. I mean, you know what? I'll put it down to 5% just to see if that makes any difference. So interest rate about 5%. You have your property taxes about 2%, home insurance about $2,000 a year, and then other costs. I put about $5,000 per year because you know, something is gonna break eventually. You need to save some money just in case, you know, you need to use that for repairs. And maybe you can get that $5,000 from the money that your tenants are gonna pay you. So, so after doing the math, your monthly pay is going to be, so before everything, your monthly pay is going to be $1,600, but after property tax, home insurance, and other costs, that's going to be about $2,800. So if you can squeeze an extra like $2,000 from your tenants, you know, that'll be good. That way you get a little bit extra money in your pocket. But your total out of pocket after 30 years is actually going to be over $1 million. That is insane. So basically, you put down $100,000 for down payment. Your loan is $300,000. You end up paying $279,000 for the total interest, and then you have the total 360 mortgage payment. That's about $579,000. That's crazy. Damn, that's whew, yeah. I mean, I don't know, man. Like, I mean, it's nice to have an extra, like, you know, $2,000 come in your pocket every single month, but like, I don't know if this is worth it. Like, I mean, like, if I have $100,000 right now, I don't know if this is what I would be doing, man, to be honest with you. So I'm all about getting a home to like live in it for yourself. If you can afford the full payment of the house, I think it's totally fine to, like, if you have an extra room, to get some extra income to like help, you know, boost your income a little bit. But like investing in like rental properties by itself, to me, feels like, yeah, you losing money basically. Especially if like, if inflation is actually 7 to 12% per year and you're only making 11% per year from your home with all this hustle. You are hustling. You are literally hustling for 11% per year. I mean, maybe some of you guys are like getting maybe 20% per year. I don't know if you're like lucky enough where you live in like a better city, or you know, where you can get better deals. Maybe you can get a little bit more than that. But like for 11% per year, why would you do that to yourself?